Tesla finally broke out over that $200 level. I had a really good day today. I ended up closing out a lot of my bullish positions, and I did close out the $190 cash secured puts on Tesla. I'm still holding my December calls. As far as price actions considered, we're still holding this weekly market bias, which is something that we know must happen if the move to $300 is going to happen by the end of this year. The reason that we thought price was going to break out today, if you guys want a quick refresher, is that we've still held this level. So we're looking right now at this market structure. You can see that if we take our swing low from back here at 169, our swing high up at 263, that our institutional buy zone is basically between the 0.618 and the 0.786. This is usually going to be the area where big money is allowed to start purchasing. So we saw price drastically sell off as we expected over the past couple of weeks. We saw big money come in, institutions started buying, and the sign that price was going to break out was that we were getting higher lows on the BX trender. You can see that as the BX trender is making these higher lows, it's showing that there's buying pressure there. I know a lot of people try to time the bottom on stocks, but you shouldn't be timing the bottom when we're making lower lows and there's not any signs of buying. Just because we think that something is undervalued or overvalued short term doesn't matter if big money isn't going to move it for us. Because no, I don't have enough money to do it. You guys don't have enough money to do it. Collectively, we don't even have enough money to do it. So it's not about what I think, it's about trading what big money's trading so that I can be part of the biggest moves in the market. And so we knew that there was money coming into this when we were making higher lows on the BX trender, which is why I was notifying the team about those positions. Now, at this point, our upside target was basically if we push through $200, that we were going to see this move back up to about 212, 216, and $220, which is about a 15% move from that low. The reason that we came up with this level is because this is where the daily market bias is sitting. When price is closed under the daily market bias, you will usually see price push back into it before finding a prior rejection. Now, if we are in a downtrend, I would say there's a huge, massive chance that price is just going to get slapped right back down. But if we move out to the weekly, you're going to see we're still over the market bias. But the thing that I don't like, and the main reason I think we're going to see one more retracement and one more pullback down to 190 and $200 in the next couple of weeks before we find a bottom, is the BX trender on the weekly is still showing lower lows. So you have to think about it like this, right? The daily is showing all of these short-term bounces, but the overall wave in the market, the overall wave of buying and selling for Tesla is still not showing enough money coming in the short term. And that's why I think we're going to reject off of the 210 to 220 area, and we will see Tesla pull back one more time. I'm still expecting Tesla to close somewhere around $300 by the end of the year. I do think at some point we will come back up to fill this gap, but I don't think that's going to be for a little bit. Now, the last thing I want to cover with Tesla is this shorter term 1 hour chart, because a lot of people were asking me what had to happen in order for that breakout up to 220 to occur. If we take a look at the 1 hour, you will see exactly what needed to happen. That market bias was acting as a resistance level right at $200. And you can see too that price was rejecting at $200 to perfection. That is the perfect sign of a liquidity level. What happens the more times that we touch a liquidity level, right? 1, 2, 3, 4, 5, 6. The more times you touch a liquidity level, the higher the chance of a breakout through that liquidity to happen, which means liquidity is going to be swept. Once liquidity is swept, there is a very good chance that we're going to move through these old areas that you see back here, basically between 226 and 210, because there's not a lot of volume there. So that's why I'm expecting that move back up to 220 and a rejection somewhere within that level. Now, if you're somebody who trades Fibonacci's, you will also probably notice on this smaller time frame that that $220 level that I expect the rejection to happen at also lines up with the short-term golden zone. So like we talked about, and this is a little further out for those of you who aren't traders and you just watch for the longer term time frame stuff, but the same way that the Fibonacci works in a bigger time frame, it also works in smaller time frames. So for instance, you're going to see here from swing high to swing low, the area that we will most likely probably reject in is right here in this institutional zone where they will start to go short. So I'm expecting a rejection between 216 and $220. You can also notice back here, same situation from swing high down to swing low. ended up rejecting within that area. As here, swing high, swing low, rejected within that area. This is why back here in July, I thought that we were going to see price push all the way back up to 240 before rejecting, but that didn't occur. We actually rejected much earlier. I hope this video helped, guys. If you want to learn my two-step trading system completely for free, go ahead and check out all of our free courses. They're linked below. I highly recommend the market bias strategy. It shows you guys exactly how I use it, custom settings, and why it's so powerful. And if you want to trade with me each and every single day, you can check out our private academy. Link is going to be in the description. Thank you guys for all the support. It truly means the world to me. I'll see you guys next time.